Good afternoon, everybody. So it is February the 20th, and I just want to do a market recap today because I think there's a really important lesson here that even I took for myself today. So it's a short day today. It's a bank holiday over in the States, so price action was unbelievably slow and super boring. But, you know, there was still a lesson in there, right? And so bear with me and we will get to it. I'll just talk through my bias initially. So my bias was bullish initially, right? So we obviously had this period of consolidation, the wick out both ends, the rejection block, the trade out of the rejection block, leaving an order block behind. We then had a breaker block form on the 5 minute, which we can see here. So with the low, the high, the lower low, breakthrough. This is now a breaker block, and we were moving higher, okay? We retraced back to this breaker block, price had moved, and we were sat at the open around this mitigation block, right? So what we know is that we can look at the regular trading hours, right? And the regular trading hours provides us our daily range, right? So from the open of the next day to the close of the previous, right? And we can see in the close of the last day we had this mitigation block form, right? So we had the low, the high, the low, the failed, swing high, and then we open below. So we're expecting price to come and test this mitigation block, right? Now, so if we go back, if we just change this chart back to electronic trading hours and we dip back in here, we can see that price had bounced off of the breaker block, right? So this here is that 5 minute breaker block, which you saw. Price bounced off it, moved higher, and we bounced off the mitigation block once, twice, and then in this hour running up to the 8:30 news embargo, even though there's no use, they ran back up into the what? The mitigation block, right? So for me, I was targeting the 15-minute volume imbalance, right? So there's a volume imbalance here, and if you look at the 15-minute chart very, very quickly, you'll see that there is a volume imbalance, right? So just here, the volume imbalance. I was expecting price to move up, tag this volume imbalance, and then use this fair value gap, or BISI, which was left behind, buy side imbalance, sell side inefficiency behind, right? So I was expecting this V, the cup, for us to break through. So this was patent to retail that the cup and handle had failed, right? And price was going to move low before going high. So that was my bias for from that 9:30 open price, right? I was expecting us to run into this 15-minute fair value gap. So I took an entry when we got above this 5-minute fair value gap. Okay, so that was my entry, and I rode it up to this mitigation block, and I held, and I got out. So it was like a net trade. It wasn't great, and so. What can I learn from this? And what I learned from this is that we need to look at this, right? So this is my Discord in the background, but this is the mentorship top-down analysis. And where we found ourselves was bang slap in equilibrium, right? We found ourselves in a mitigation block. So if we're bullish, we're expecting to see this run as running into a premium, right? And this is the same on all time frames, right? So don't worry that it says monthly. This is the same on all time frames, right? So we're expecting a mitigation breaker, liquidity void, fair value gap, bearish order block, rejection block, old high, right? So, but then if you're bearish, this is quite confusing. This sort of the other way around in reality. You'd see a mitigation block, bullish breaker, liquidity void, fair value gap, bullish order block, rejection block, old low, right? So if we leave that there for a second, right? I'll try and shrink it down a bit. Right, if we leave that there for a second, we can see that just before the open price, we ran into a mitigation block, and we are in an area of equilibrium, right? So we're in an area of equilibrium. Like we're not in a discount, we're not in a premium of this range, right? We're in an equilibrium. So either side, you can say, well, we've got a mitigation block if we're looking bullish. So the first thing we run into is a mitigation block, bang, straight into it. What would we be looking above that? We'd be looking for a breaker block. The breaker would be up here, right? And then after that, we'd be looking at a liquidity void, which would be up in the run down, right? The initial run down. So we'd be looking at this liquidity void, and then we'd be looking at sort of fair value gaps within inside that, right? So. And then the bearish, and then an order block, a bearish order block, rejection block, old highlight, right? So, but if we look at the opposite, right, we can, as soon as it failed, and this is the lesson, as soon as it failed, we could be looking at the opposite, right? So it failed the mitigation block, and as soon as we got below this balanced price here, below this balanced price here, we'd be looking for price to run down to the next objective, which would be a bullish breaker, right? And so where is our next bullish breaker? Our bullish breaker was back at this 5-minute bullish breaker in the day, right? So we failed the MIT, it's going to run to the breaker. So if we had been able to frame that, we were looking to, run down into, a discount, right? We could have framed it like this. As soon as we broke below equilibrium of this range, right? You can even take it from here, right? So this is the low the pre-market high and low, so that was our range, right? So as soon as we broke below equilibrium and we were broken below the mitigation block, so we see the mitigation block here, the next target is the breaker, right? Breaker. And then after liquidity void, the next thing after that is a fair value gap. Now, this is where it gets interesting, right? Because what do we have below that? If we look at the hourly, what is this? This is a fair value gap, right? So if we bring that, so we got the mitigation block that you saw us fail, ran down into the breaker block. Next thing would be a liquidity void and a fair value gap. If there's no liquidity void, you go straight to the fair value gap, right? So this liquidity void and the fair value gap, right? So price is going to want to run deeper into this fair value gap, right? It's going to want to run deeper into the fair value gap. And we know that consequential encroachment is a point of the fair value gap. And what does it actually run to? It actually runs, if you take this entire range here, it actually runs bang on to equilibrium of this entire range. So it took us out of a premium, running us back into equilibrium of this price leg. But on a closer range, right, in terms of the opening range, so our pre-market range, which was this was our range we were working with, we were in a premium, right? So we ran, and as soon as we broke equilibrium of the premium, price was going to want to run down to a discount, okay? And so that is when we could have started looking at this, right? And mitigation block, breaker, liquidity void, fair value gap, bullish order block. So the next question we ask ourselves is, okay, so where could price run to, right? If we're just looking at this as a pure example. And I said this in my pre-market commentary, is that I did feel we would get up to this volume imbalance and reject. It just rejected early, right? It happens, it's cool. So if we look at the 15-minute, right, if we look at the 15-minute chart just for a second, you can see that the next buck on the list is this order block, right? And what they're going to be wanting to do here, they're going to be wanting to pick up longs to move it higher. Now, if it fails that order block, we'd be looking at a rejection block, and then an old low. We'll be looking at a rejection block. The rejection block has already been tagged. So this is the rejection block. And if you look at my last video, my ICT series, I actually cover this exact order block, this exact rejection block, right? And this candle comes back and hits it. So for me, that rejection block has already been tagged. So the next one up is that order block. Now, if it breaks through the order block, I can see us taking these old lows and going down to consequential encroachment of the weekly, right? So that is how I'm framing it, using this top-down analysis in terms of priority with the PD arrays, okay? So just to recap, right? We were in a premium of the range we were working inside, but in the general theme of things, we were in a premium, right? And as soon as price broke below equilibrium of the premium range, right? So this range here, right, we were in a premium of that range, right? We were in a premium. So anything in this range above equilibrium is a premium, right? And so as soon as, and this is the range we were working in a day. So as soon as we broke below equilibrium of the premium range, and we had failed the mitigation block, right? We'd failed the mitigation block. The next target is the bullish breaker. And where was our bullish breaker? It was that 5-minute breaker, right? On the 5-min. And what did price do? It ran down, albeit, unbelievably slowly. It ran down to that bullish breaker, right? And so after that bullish breaker, you're looking at the liquidity void or a fair value gap. And we had the fair value gap on the hourly, right? The hourly fair value gap, yeah? And so price ran into consequential encroachment of that fair value gap, which also happened to be equilibrium of this entire range. And so what we could be looking for next is if price, fails to break above, this range here, we could be looking at that bullish order block, right, to pick up longs, and framed that the rejection block below has already been picked up. So that's how I'm going to run into the next day. I'll be looking to pick up orders off this order block, right? But yeah, I hope you found that useful. Yeah, that's going to cover today's session. So until next time, look after yourself and trade safe. And just let you know, the Discord is in my socials. So if you guys want to jump in our chat, feel free to do so. It's currently still free to enter, and it's still currently open. So look forward to seeing you on the other side. Take care. Cheers. Bye.